Round 2, fight.
Let's go.
All right, let's separate our times. All right. All right, so now we're going to do this. I had to take my daughter to school. Just to realize that she didn't need to go to school early this morning, so we are behind the curve on putting the highest probable levels in trade on here. But with that being said, we actually can come in here and see what this would feel like with. Should I use the one that says fixed, TC fixed?
Yes, the latest one I sent you. What fix is it? Sorry, it should say TC version 1 _ PD fix.
Yep. All right. Cool.
Yeah, perfect.
So we're going to start fresh. We're going to go over to view, bookmarks, reset to start. Close these down. All right, we're starting with 4,180 data sets. Put our Asia, well, first and foremost, start right here. All right, so yesterday we dug again into NFP Friday. So what I told you guys before, when we dig into NFP Friday for that month, that's telling you the market's slowing down. Start expecting reversals the following months after, right? Right now, we're above previous month 50%. NFP Friday, we have to anticipate because rules are rules, right? Like I have to look for the low of the day, right? By 11, right? That's just the rules. However, when we come over to our weekly chart and we measure it based off of the fixed constant, which is the 5 EMA, we can see that this week we went 1.42 to the downside. Sorry, let me fix that. 2.6 to the downside, 5.5% to the upside, right? We're anticipating the month to end higher, right? But right now, we're in limbo land. So, good morning again, Matt. So now, sorry, 1.6 to the upside and 1%, around 0.9% to the downside, right? We're expecting to end the month higher based off of what NFP Friday and previous month 50% is, right? We look at our weekly profile chart, right? We can see that we are below Tuesday 9:30 and 10:30, and we are below Sunday 18 to 1900, right? When we do that kind of things, we have to start filtering for a high of the week. In this case, the high of the week would have been on Tuesday 1400. If we swipe up and above all this, then we have to filter for Wednesday to be the low of the week,
Yeah.
right? So right now, you shouldn't have anything selected with high of the week, low of the week. If you do have one thing selected, it will be high of the week, Tuesday, right? And that will tell you the last 5 highest probable previous weeks that have similarly followed the standard deviation and the moving average of how this is synchronized, right? So we can see that most of them we go flat on Thursday and then we drop right in the afternoon. This one we continue dropping in the morning. We go up, they drop, they go up and flat for the week. and so forth and so forth, right? So now we'll put in our highest probable trade on the daily, right? I've already put in previous day high, previous day low, structure stat 1, structure stat 2, the time-based probabilities, and the Asia and London OU line, right? We can see that from 1800 to 1930, we left to the long side, this Asia range, and until 230, we stayed above. So this would be under the box right here, right? What did Asia do? Well, we just saw that Asia went long and stayed true, right? Now we're down to 1,345 data points, right? And now we have the ability to say we know what London did. London went long from the 230 to 330 range until 7, right? Went long and stayed true. So now we can go on and put our pricing model in, and that pricing model is going to be New York 1 is breached versus New York 1 not being breached.
Yeah.
Or usually we do London.
Yes.
All right, so now there we go. Now what we're going to do, right, we can see that there's a 70%, and thank you, Jeremy PC, if you're listening, 1 in 930. We can see that New York model is going to be above, which we've already, the London, which we are, right? Now we're going to say from 7 to 8, wherever we are within 7 to 8, right, is New York long, and then does it be a true or false? Since we don't have that capability because we're in that range right now, we're going to do London or New York 1. I'm so used to saying London. New York 1 being long. What would that look like? It would look like this right here.
Yeah.
Right, coming back down here. Where we just make higher highs and lower highs. Right? And then New York 2 would look something like this. And as New York 1 plays out, we'll have to update the variables. And since I'm not on stream during that time, right, I'm not able to do that with you. But right now, this is what New York 1 not being breached looks like. Meaning that whatever this 7 to 8 o'clock range is, the midpoint alerts us that it's going to get breached, but this 7 o'clock low gets taken out. Well, guess what? There's a high probability of that happening because what's below us? Midnight, Globex, and settlement. Right? So now, even if we left it as long, if we put false for long, right, we can see that this would be the scenario that we would put the high of the day in between 9 and 9:30, and then we drift lower, and then I don't even know what the hell kind of price. We'd range the rest of the day.
Yeah.
Right, so we're going to put this one in because there is a high probability, and thank you, Jeremy, again for bringing this up, for that to breach. So it would look like that. Something like that. right? And now we're going to do the same thing with if New York 7 to 8 decides to go short. And there would be a false. It would look like this.
Yeah.
Something like this.
So which one went short? Sorry, that was
The one where New York 1 gets breached.
So there's no short.
Mm-hmm.
Yeah. Okay. I just wanted to make sure we were okay on the inversion there.
And if we look, right, the likelihood of that happening, we just take out H4 highs. Means we can come lower. There's a lot down here to include settlement and all that that would make us go lower, right? That we need to pay attention to, right? So remember, this is a new system that we're testing ourselves, right? And then New York 2 would end the day higher. Which would look like this. Right? So both of them, let me check my data. So this New York 1 would be a short with a false, because if we put this on all, right, there's, even as a short, there's still a 75% chance that it becomes a false, right? And the New York 1 model looks exactly the same as if we put false anyway. New York 2 looks exactly the same if we put false anyway, right? So what that's telling us, what these things are telling us, right, is the reason why this 7 o'clock to 8 o'clock hour will, whether we go long after it at 8, 9, and we pull back, remember what's this right here, right? This is settlement all the way down here, right? Meaning that our RTH gap right now looks like this, right? Just like that. So now what we're going to do is we're going to update our probabilities, right? We'll leave this on short for now. Now we're going to go to time-based structures. And we can see that there's a 73% probability that midnight gets hit between 8 and 12, right? So we can switch this to 73. We can see specifically that that time is more likely to happen at the 9:30.
Yeah.
Under these variables, what Asia and London have done, we can see that there's a 52% probability that settlement gets returned to based off of what Asia and London have done. And we can see that there's also a 52% probability that Globex is returned to. Right? So now we're going to do our RTH gap. Come down here. We're going to put in, what's today? Thursday? Thursday. Right? And now we have the true RTH gap based off of what Asia has done, London has done, like what the probability of the gap being filled. Right? So we can see that 25%
79%.
has a 79% probability.
Yeah.
We can see that 50% has a 66% probability.
Yeah.
We can see that 75 has a 53%.
Yeah.
And we can see that 100% has a 51% probability of being filled based off of the day of the week and what Asia and London has done. Right? So now we're going to do a previous day highs, right? Which we still need to combine these into one.
They are. It's above. Just scroll up a little.
Ew, this?
That's it.
Oh,
All
nice.
day.
Okay, so this is previous day high, has a 69% probability of being hit. Thank you for doing that.
That's no problem.
And we can see that previous day low has a 33%. Now we're going to do structure stat, right? 12 hour. Oh shit, let me turn this off. Right? Make sure you always reset your RTH, unselect that. Right? Which increase previous day high to 72, previous day low to 26. Now the 12-hour cycle, so from 1800 to 06, that high has an 85% probability of being hit based off of what Asia has done in London, and it's been hit. Right? And we can see that previous low based off of what Asia and London has done has a 52% probability. So now we're starting to get some definition. All right, we can see settlement 52, structure set 52, previous day low 33. So typically based off of what Asia and London have done, right, there's more likelihood of this thing pushing, and that's with us selecting, right? If you remember what we selected for New York 1, the 7 to 8 o'clock being the range, 8 o'clock to 11:30 being the variable, right? We can see that we selected that it went short. So we know that the net of when it does go short, which highest probability right now for the drop is around 8:30, we know that the net, right, as it comes down, will be somewhere right here. We're going to pay close attention to midnight and London OU, right? If London OU gets breached, we expect midnight and the London low to get hit. Those get hit, we expect Asia's OU to somewhere within this range of probabilities. The highest probable thing is the reverse and net. Use these as a net and then to continue higher. Right? So now what we're going to do is we're going to put our projection-based probabilities on. And this is from turning on the VET. You're going to put on this on Wednesday, and it should be 18 to 1930, right, Costa?
Yes, exactly that, yeah.
All right, we know that 1, 2.5, and 5 have already been hit, so we need to put the probability of 8. Which is at 20430.
Yeah.
What is 8's probability?
22% I have.
22%. And then we're going to put in our lower ones. What's negative 2.5?
Negative 2.5 is 16%.
16?
16, 1/6.
1, 6. For 2.5.
No, 5. Oh, sorry, yeah, for 2.5. Yeah,
16%.
Yeah.
I see that with my own eyes.
Yeah,
I've
have a
never
look.
seen. Holy shit. All right. So now that's wild.
Yeah, it is.
Now what we're going to do is we're going to put our higher day, low of the day. Right? We can see a higher day percentile starting at the tallest building, going over to the first one. So the tallest building right here is 0.60, and going one over is 1. What is the red?
Red is median.
And blue is?
Blue is average.
And black is variance, right?
Variance, yeah.
So we're going to go from Globex Open, which is right here. We already marked it. Up 6, right? Draw a box. We're not going to drag it over just yet. To 1, right? We can see that from a time perspective, that high of the day has a more likelihood of being hit in the afternoon at the 1400, 1500 time frame.
Yeah.
Right? Let's do the low of the day real quick. Low of the day is jacked up, dude. I think.
What's up with it?
So low of the day is -2. Tallest building to the blue, 0.68.
Yeah.
Is that right? Will you check the data to make sure that's coded right? -2. Right here.
Yeah. We got
Okay. The -6.8. Right, and we can comfortably draw this over. Shade it green. Put low of day -0.20% to -0.68%. And what is the time that's more likely to get hit?
according to the data, it's already happened.
Okay, according to the data for the RTH, it's likely to happen at 9:30 to 11:30.
Yeah, okay.
If
Yeah.
it hasn't already happened.
Yeah.
But remember, we have to factor in
Sorry.
the net process for New York 1.
Yeah.
Remember, we're expecting it to be netted.
Yes.
This Asia low has a high probability of, actually no it doesn't, because it actually got taken out right there. Okay, cool. Okay, so now we're going to go to our distributions. Our average 10-day range, we're going to put the vet on. You can see that our average range is 272. We've moved 51% of that. So we're going to draw out 272. Which is 1.31%. Right? We can see that our average Asia on a Thursday would be 0.5%. And we met that already. So that is from 1800 to 230. We hit that already. Average, nope. 18 to 230, 0.51%. Right, we can see that our average London 230 to 7 is 0.47%. We actually, I think, met that. There we go.
Yeah. I like that.
What is it? 0.47%. Right? And then we can see that our average 7:30 to 11:30 is 1.19. We can see that our average 11:30 to 16:15 is 1.14. Which would look something like this. So we anchor this off that settlement price. Because remember that high of the day zone?
Yeah.
16.15. Love you, kid. Have a good day. All right. So now, looking at the data, looking at this right here, let's go revisit our high a day. Right. Let's put our average 10-day range in. Let's say it does hit right here. We know that there's a high, like we know what's previous day high. So we had, whoa, that's weird. So this might be the low of the day. If we anchor that to low of the day, we barely get to previous day high. That'd be wild. But we do need to visit the high of the day zone because it's not synchronizing, right?
Can I just say something?
What's up, big guy?
Yeah, so if you look in the London tab,
1.10. All right, London tab.
yeah, we got some high information and exhaustion information in there, as you can see. And I've just projected that from the open, the 3:30 open, right? Just make sure I did that correctly. So the 3:30 open, we extended to 16 or 16, which is right in the two tallest buildings there.
Mm-hmm.
I'm just wondering, is that useful in this context?
I'm sure it is. Let's revisit that when we re-engineer this day.
All right.
Yeah, let's revisit that. So maybe our high of the day zone should be anchored off of, we know that majority of the bulk happened in this range. So from 0.6 to 1.1, right? But if we see this area right here, from here to here, 1.10, that might be more realistic to what we're seeing. So if we go to Globex Open, go 1.10, it still doesn't take you up to previous day high. So previous day high means that our high of the day zone, if we are going to take that out, would be this area right in here. So the average, which is 1.39, to the variance, which is 1. What is it? 1.9. So if we do that, we said 1.39, which is right here. So that would look like this to 1.9, which would be right there, something like that. That means our average 10-day range, we'd be expanding our average 10-day range, which could be the situation if this is truly the low of the week. If this is the high of the week right here, then this whole scenario, this whole probability will be wrong, and we'll know by settlement, like by 9:30, if we're wrong, especially that we come down and touch this.
Yeah.
Right? But based off of what Asia and London have done so far, like it's telling us to expect upside movement. Our upside probability has this previous day high at 69%. So right now, we're just going to make that our high of the day zone, not overthink it, because we know that that falls into, this falls within that cluster where the high of the day data lies, right? So we can see 1.10 right here, and the lowest point is 0.98. If we go back to looking at our data, we can see this is 1.10 right here, and this is 0.9 right here. So we're saying we're going to fall based off of what Asia and London did in this variable for the high of the day zone. Because Asia and London are where they are and where we are right now, there's a high likelihood that that 930 can put in the high of the day. We will refer to our captain arrow boxes to make that decision, right?
Yeah.
So this, remember, we can put this right here. We can move this up here now. These are our probability structure points to make sure that we can align it with the actual live price that's happening.
Yeah.
Right? So if New York is breached, right? The 7 to 8 o'clock hour is breached, meaning we took out 7 o'clock lows. We anticipate having a net during the 8:30 to follow with a higher close. That's what statistics are telling us, right? If we can't breach that, then it's just going to be a slow grind upwards, and we expect to put the closing price or the high of the day in around 9:30 for us to end lower. Am I missing? Like this, right? So this would be the high of the day, right? And then now all we have to do is put in, something's not right here.
They both say breached on the left there, look. I just wondered if, have you got
The top one is not breached. So this
right.
is 2. Okay, so I've got the wrong scale right here. So this is 9:30. So I need to go back through. The top one is breached. This one is not breached.
Yeah.
So we need to get this set up for not breached. So this means it'd be a long all. And we can see that this is what the New York 2 from 11:30 to 1600 would look like.
Yeah. That's better.
So we expect to put the high of the day in, right, around 1300 to 14, and that 1400 candle would go down and be an inside print. That's what we're seeing. All right. So these are our structure base. Move this all up so I can see it when price is printing. Just like that. So these are structure probabilities, right, based off of what Asia's done, what London has done. Asia went long. And let me go to the 5-minute real quick. So what time frame is this? This is 2015. So this Asia is still open. So this has a high probability of being returned to when we get to that net in process based off of that. Right, but based off of what Asia and London has done, right? So this is Asia from 1800 to 230, using the 1800 to 1930 as the range, and then the 1930 to 230 as the variable of what it does. Right, it went long true. We know London using 230 to 330 as the range and 330 on as a variable. We know that it went long and couldn't violate this, so it's a true. Now what we're saying is New York, whether we go long at 8 o'clock because this goes from 7 to 11:30, right? If we go long and then go false, which has a 70% probability of happening, right? If we see 7 to 8, like if we go long, we know that it has a 70% probability of being false, right? Making this breached, right? If this goes short, we know that it has like a 68% probability of having false, meaning that that net-in process, right, happened and we still end the day higher, right? So we see, right, if New York is breached, that net-in process will happen at 8:30 on, between 8:30 and 9:30. That's when that happens. If we can't breach that, which this one has a 70% probability of being breached, right? Remember, either way we look at it, right, we see that if it goes long, it has a 65% probability of being breached, right? If it goes short, right, it has a 75% probability of being breached, right? So either way, we expect at 8 o'clock, whichever way it breaks out, right, for us to have a false and then a recovery, right? Does that make sense to the crowd? And with that being said, I do have to jump, right? We're going to pay attention to our hourly boxes, right? Because remember, these tell us the market condition. And as we enter, like, are we trending? Are we ranging? Is the RTH going to be a range, directional with pullback, or directional with no pullback? The fact that we put out of the last, let me pull up a stat for you guys. Out of the last 2,000 days, right? Remember, the RTH has its own pattern, right? Let me pull up this stat. All right, now let me put this on here. This is why I told you guys to do this exercise. It's not going to show. Yeah, let's do it on this one. Right? We know that the RTH has three possible scenarios based off of the hourly chart. It has a range, it has a directional with no pullback, and it has a directional with pullback. If you don't understand the conditions of that, screenshot this playbook and go back test it. Right? I've done plenty of videos on it. I've done plenty of exercise on it. Right? Screenshot this so you understand the roll count of what I'm talking about here. All right, cool. You screenshotted it. Moving on. Right now, right, we see that out of the last 2,000 days, right, a range has happened 979 of those days. 1,000 of those days we had a directional with pullback. 154 of those days we had what we had yesterday, where it was a directional with no pullback. Right? Right? So as we approach the 9:30 hour and as we approach trading this, right, based off of our statistics, right, we're trying to determine, right, we know that more than likely this is going to be a range day based off of what that 9:30 price prints, right? However, we also know we've already filled 60% of the average 10-day range already, right? Does that mean we're not going to trade? No, we're definitely going to trade, right? But now we have a clear understanding of when we should be taking longs, when we should be looking for shorts, et cetera, based off of that New York 7 to 8 o'clock hour being breached versus not breached, et cetera, right? So hopefully this helped. I do have to jump right here because I still have to actually write my newsletter, which if you guys don't read my newsletter, right, let's talk about why you should read my newsletter. Right, let me pull up yesterday's. Right, because I know I have a lot of equity traders that follow me, not just intraday NASDAQ traders, right? What we are starting to do is every day I sit there and read news and research columns from big time players because I have access to that. And I go through and I can take the most concise articles I keep seeing, rinse and repeat, and put them on for the next day. So you actually have an understanding of what the hottest topic of the day is going to be, right? So yesterday we saw that. The day before that, McDonald's bringing E. coli outbreak, right? That was huge, right? We saw that consumer debt was a very warning, and this not isn't just using one analyst. This is using multiple accredited licensed analysts in their research papers to look at, right? We saw that credit warning debt was on the forefront of what people were paying attention to. AI chip restrictions and the geopolitical implications of that and how it's going to impact NVIDIA. Earnings highlight, we talked about Verizon, 3M, GM, and others, right? And then how the indices were responding off of those newses and what we needed to focus on, which yesterday was Tesla, right? And we saw how that responded, IBM and Lam Research, and what the markets are going to really consider, right? So that measly little $8 a month that you guys pay for my newsletter, that doesn't just get you these videos with the highest probable trade, but it also gives you insight on like what news really matters for you equity traders. Like on Fridays, we talk about how what market condition we're in based off of the sub industry groups and the industry groups and what's actually performing and what's actually catching a bid from investors, et cetera, et cetera. So if that's something that you're interested in, feel free to subscribe to my newsletter, which yes is $8 a month. You're paying for my time, Costa's time to fucking bare knuckle fist fight code to pull these stats, my time to read the research and build the workflow process of this. And if $8 is too much for you, just keep watching my morning videos because I do them for free. All right.